Yes, good evening, class. So you're welcome for today's lecture. This is our first lecture. We are going to look at a module called Financial Market and Financial Institution. So in today's lecture, we are going to look at the introduction to financial market and institution. So basically, in this lecture, let's look at the module description. So the financial markets and the financial institution module provide an in-depth exploration of the structure, function and operation of financial markets and institution. So in the whole of this module, we are going to look at the structure of financial markets and institution, the functions and how it operates, and it examines the role they play in the allocation of capital, risk management and border of financial system. So let's look at our learning objectives. So our learning objectives are what we are expected at the end of this lecture. So upon the completion of this module, students will be able to describe the different types of financial markets, those types, the money, capital and the derivative. So at the end of this lecture, you should be able to know what money is, capital and derivative, what they are. And then you should be able to analyze the functions and mechanism of various financial markets. And then you should be able to know to identify and differentiate between different types of financial institutions, that is to say banks, investment banks, insurance company and many others. And then you should also be able to assess the roles and functions of this institution within the financial system. And also finally, you should be able to analyze the impacts of regulations on market operations. So basically, these are our learning objectives or learning outcomes of this module. So we have topics that we are going to look at. So we have introduction to financial market and institution. We are going to look at the types of financial markets. We are going to look at the financial institutions. We are going to look at the market operation and regulations, risk and return in financial markets, financial innovation and trend. So basically, in this module, we have 6 topics that we are going to basically look at. So let's look at the introduction to financial markets and financial institutions. So we are going to look at into detail. So what are the financial markets? So our financial markets are platforms where buyers and sellers can trade financial assets. So there are different many types of financial markets, and each with its own unique features. So some of the most common types they may include, we have equity market, which include markets for buying and selling stock. We have debt market. Debt market is markets for buying and selling bonds. So we have derivative markets. So derivative markets are markets for buying and selling contracts whose value is based on the underlying value of another asset. So we have foreign exchange market. These are markets for buying and selling currencies. So that's all about our financial markets. That's financial markets. So in other words, financial markets, it may include any place or system that provides buyers and sellers the means to trade financial instruments. So that can also be a definition for financial markets. So they may include bonds, equity, the various international currencies, and then derivatives. Then we have the type. We have currency market, money markets, derivative markets, and then we have capital markets. So let's look at financial institution. Our financial institutions are organizations that provide financial services to individuals and businesses. There are many types of financial institutions, and each one has its own unique role. So some of these types of financial institutions, they may include, we have banks. Banks accept deposits from savers and make loans to borrowers. So we have investment banks. These investment banks, they involve banks that they help businesses raise capital and advise them on mergers and acquisitions. So that is investment banks. And then we have insurance companies. Insurance companies provide insurance against risk of such as we have property damage or loss of income. So that is insurance company. So in other words, financial institution, we may look at the most common type of financial institution may include bank. We have credit unions, we have insurance companies, and then we have investment companies. So you may define financial institutions as a company engaged in the business of dealing with financial and monetary transactions such as deposit, loan, investment, and currency exchange. So that also can be one of the definition of a financial institution. So financial institution may include a broad range of business operation within the financial services sectors. So they may include the bank, insurance company, brokerage firms, and then investment dealers. So that's financial institution. So let's look at why are financial markets and institutions so important. So our financial markets and financial institutions, they play a vital role in their economy. So they help to allocate capital. Our financial markets and institutions help to channel funds from savers to borrowers, which allow business to invest and grow. So in borrowing, in funding the savers, in serving the savers and then borrowers, it allows the businesses to invest and grow. So we have another one. Another reason, it help to manage risk. So financial markets and institutions offer a variety of products and services that help individuals and businesses manage risk. Those risks may include operational risk or financial risk. Then we have facilitate trade. Financial markets and institutions make it easier for business to trade goods and services across borders. So it helps to promote economic growth. A well-developed financial system is essential for economic growth. So those are some of the importance of financial markets and financial institutions. So let's look at the importances of financial markets and institutions in the global economy. So one, they are more the same. Financial markets are the channeling resources for growth. This is important, number one. So we have a capital allocation. Financial market act as efficient conduits, connecting savers with borrowers. Savers seeking return deposit their funds, while business and government need capital for investment tap into this market. So this allocation fuels economic activities and fosters growth. So that is one of our importance. And then we have to its risk management. So weathering economic storm, hedging against uncertainties. Financial institutions like derivatives and insurance contracts allow individuals and businesses to manage risk associated with price fluctuation, interest rates, and other economic factors. So this stability fosters confidence and encourage investment. So by doing so, it fosters confidence and then it encourages investment. So point number 3, we have a facilitating global trade. So breaking down barriers across border transactions, foreign exchange market enables seamless international trade by facilitating currency conversions. This may allow businesses to import and export goods and services efficiently. So it connects the market and promotes global economic integration. So that is our important point number 3. So let's look at our point number 4. It helps in financial inclusion, expanding the circle of opportunities, reaching undeserved communities, microfinance initiatives, and accessible financial products offered by institutions bring financial services to previously extended population. So this empowers individuals and fosters entrepreneurship and contributes to poverty reduction. So let's look at the challenges on the road ahead. What are the challenges and what could be the solution of these challenges? So our challenge number 1, we have legislation and stability. So ensuring responsible financial practices and robust regulatory frameworks are crucial to maintain market stability and prevent crises. So we have technological innovation, embracing emerging technologies like blockchain and artificial intelligence can enhance efficiency, transparency, and access to financial services. So our point number 2, we have addressing inequality. So promoting inequality access to financial products and services can bridge the wealth gap and create more inclusive global economy. So that's our point number 3. So let's look at the historical evolution of financial markets and institutions. So let's look at the Alexids. What does the Alexid say? The barter, temper, and money. It includes a theory. We have barter, temple, and money lenders. So these are ancient to medieval time. This is ancient to medieval time. So let's look at barter system. What does barter system mean in this evolution? So barter systems, the earliest trade involved bartering goods and services directly. So we have temple economies. A religious institution facilitated credit and money lending in Mesopotamia and ancient Greeks. So we have private money lenders. So money lenders emerge, charging interest and laying the groundwork for future banking systems. So this is all about the Alexid. It includes barter, we have temples, and we have money lender. So we have looked all about what they meant by barter system. What does barter system mean? Evolve. What does a temple economies evolve? What does a private money lenders do? And then let's look at our second evolution. We have Renaissance race. It includes exchange, bills of exchange, and then the birth of bank. So medieval to early modern. It was medieval to early modern. So let's look at what they meant by merchant rates. These merchant rates increased trade, led to the development of exchange like both the breeds for efficient trading. And then let's bills of exchange. Negotiable. It is a negotiable instrument, simplified cross-border trade and promoted the use of credit. So this is bill of exchange. And then we have the banking flourishes. The banking flourishes, or in other words, the birth of bank. The birth of the bank. So the Medici Bank in Florence and other provided loans, money transfer, and investment opportunities. So let's look at our third evolution, historical evolution. We have Industrial Evolution Spark. So in this Industrial Evolution Spark, they also include three. We have the stock exchange, joint stock companies, and then new markets. So this was merged in early modern to 19th century. So let's look at the stock exchange. Stock exchange boom. Familiarized exchange for trading stock emerged like the Amsterdam Stock Exchange. So we have joint stock companies. These are the businesses. The businesses pool the capital through joint stock companies, fueling industrial growth. And then we have the central bank and insurance. Central banks like the Bank of England were established, and then insurance company mitigated risk. So and then we look at our fourth historical evolution. We have globalization garnered. These ones, they involve technical advancement and then expansion. So it was introduced in the 20th and 21st century. So they include telecommunication revolution, telephones, then the internet, and transformed communications and trading speed. So in this 20th and the 21st century that we're in the 21st century. We have telephones. You can use telephones. The internet is good. The communication is being transformed, and then the trading speed is being reformed. And then we look at the derivatives and derivatives market. So complex financial instruments like options and future emerged. And then we look at the global financial centers. International financial centers like London and New York became hubs for financial activities. So that's all we have looked at. There were 4 historical evolutions, and then let's look at the modern challenges and future landscape. The modern challenges. What are the challenges that we are facing right now in our financial institutions and financial markets, and then what could be the solution to it? We have regulations and financial crisis. So the solution, the need for strong regulation frameworks to address crises like the 2008 financial crisis. Financial crisis. So we have finished disruption. Technological advancement like blockchain and AI continue to reshape the financial landscape. So and then our point number 3, we have sustainability and inclusive finance. Promoting green finance and ensuring financial inclusion for all remain key challenges. So those are our modern challenges and the future landscape for and that are involved in financial institutions. So I thank you for today's lecture. That's all. May have a great day. We shall meet up in our next lecture. Thank you.